understand these things. Very basic.
So now, irrespective of the market, irrespective of the market, either is crypto, forex, anything, they have the same pattern, right, in their movement. It's either they go up or they come down, right, or they go sideways. The only difference in them is that what form those reaction to them are what we call fundamentals, right? So what form reaction to all of them are what we call fundamentals. So just like what are normally fundamentals. So government policies, news, all of those things are the fundamentals that have influence on the movement of particular markets. For instance, if you look at forex, and that's why we always tell people that either you are trading forex or crypto, you need to have an idea of economic calendar. We call it economic calendar, right? Where you say forex factory. Now, what economic calendar? Ordinarily, the economic calendar for the whole world, but we all know that the one that affects every other thing is dollar, US dollar. Now, so as a business person, sometime when you wake up, either you are trading crypto or forex, you want to see that are there any fundamental news coming up for a particular day? Like today now being Monday, this is 17th of February. There is no important news. How do I know? All of the news available here, if they are strong and news that can easily affect market, you will see them in red envelope. All right. And what most people pay attention to, yes, what most people pay attention to are news that has to do with US dollar. Right. So like tomorrow now, they say Donald Trump is going to be speaking. President Trump speaks. So so now you can you can now say that okay, whatever Trump is going to say tomorrow now, if it's going to be very negative, it can affect both crypto, everything. You understand?
I like this kind of thing. I'm telling you.
So at the end of the day, you just wake up sometime and see that the market is crashing. You'll be shouting, "What's going on?" and all of that. Because somebody is so somebody is aware that there's an information ahead. Then we have other news that they call unemployment claim. So if if they have, so like this Thursday, there's going to be unemployment claim news. Now, the previous data showed 214,000, okay, or what they forecasted. So now at the end of the day, you will see that when those news come out, if it's unemployment rate, if unemployment rate increase, then it's negative on US economy. And so if it's negative on US economy, you expect the dollar to get weak. So any other thing you are now buying or transacting with dollar will gain strength.
Exactly.
So example, Bitcoin, because the bias is and the sentiment is that people will prefer to now send their dollars week to something that can give them backing.
I'm telling you.
So you will now see that it's okay. People will buy dollar, buy Bitcoin, people will buy gold and all of that. So those are the fundamental is important. Then I have another tool here, which is free. If you look at it, what it measures is the currency strength. Look at dollar went down this morning, is just picking up. Now, for people who trade forex, this is where we look at CHF, that's France. Now, this is France. If it's weak, and when you look at it, if it's weak against like New Zealand dollar, right? So that means if I'm going to combine this chef and this, so I would prefer to use this to buy this. So that means at the end of the day, anything negative against dollar will give upper to other currencies. So anything positive on dollar, then we depress other currencies pair with it. All
Okay.
right. And so these are
Okay.
just fundamental that create those things that you now say, okay, even when you are doing your technical, you still pay attention to the fundamental. Are you getting
Okay.
it? You are still paying attention to
Exactly.
fundamentals because they are the actually what cause reaction. People start reacting and all of that, and those are the
Exactly.
things
Okay.
that we do. Now I'm going to do something very snappy so that we can pick a coin and see if we can find an entry on any of them.
Okay.
Right. So if you see what I wrote here, as first thing I wrote here is that I'm talking about top-down analysis. So you now ask me, what is top-down analysis? If you want to screenshot this thing, you can screenshot it to have it.
Okay. 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 Done.
Yeah. So now, if we say top-down analysis, what exactly is top-down analysis? Most people do not understand. So we are going to pick a coin that we may find probably buy and selling on. So let's pick either near protocol or any of. So let's pick near protocol or XRP. Think near protocol. Okay. So let's pick near protocol, for instance. Now, this is near
Okay.
top-down analysis means ordinarily you are supposed to do your structure. Now, I will hide all of these things so that the chart will be plain. Okay.
Okay.
So ordinarily, this is how the trading view looks like, right? The chart and all the like. Now,
Mm.
this is reaction and action of people in the market. Now, so
Mm.
when we talk about top-down analysis, we always tell people that top-down analysis and doing a market mapping, you're supposed to do it on at least you buy and selling, supposed to do it on daily time frame. Okay.
Okay.
So if I want to do on daily time frame, what I do basically is that I'm going to look for maybe a line and all of that. And what I'm actually looking for sometime, this is the candle stick, but I may want to change this one to line. Look at it where I go here. And I only tell us sometime that if I'm looking for anything on the chart and I don't know how to
Mm.
get them, instead of clicking at once, I place my cursor on the object. It will
Yeah.
tell me what that thing is.
It will display.
Yeah.
Yes. Display
So
it.
now,
Mm.
if I click on this now, see line here. Now I click
Okay.
this line. Now, why do I click on this line? So that I want to
Mm.
now map some key areas of this chart.
Okay.
Now, this is a historical data now. So if I want to
Yeah.
map area of this chart now, perhaps if you look at, let's say this is the highest, but I may want to just pay my attention on this place. Perhaps make this line more thicker so that I can just use. So you see now what I've done here is that ordinarily, you see where I place this line. This place I place
Okay.
this line, and then I come down here again. Yeah, so let me place another one here. Now, you will
Yeah.
be
Okay.
imagining, why am I placing all this line here? They are area of importance. You getting it now? They are area of
Mm.
importance because this is where the market got to a particular time and couldn't go up again. And
Okay.
historically, if you go back sometime last year, May, that was the exact place it
Mm.
to gain and came down. I
Okay.
so you can now see, okay, so even when
Mhm.
the market got here and came down and you have marked it, it has touched here, 1, 2, 3. That means this was a very nice support for it at a given time. Now, I want to look at
Exactly.
another area where I can have series of touch points. So I may have to find if it's more recent,
Okay.
somewhere there, or sometime if I want it to grab more than one place. This will
Okay.
make sense here because look at the point here, right?
Okay.
Look at another point.
Yes.
Look at another point here. Look at another point here.
Exactly.
Look at another point.
Exactly.
It make a whole lot of
Mm.
sense. Perhaps, can I still find another area? Probably. So this is called mapping, and they are very important
Okay.
when I'm doing my business. And you always hear me say to people that if you want to succeed in your business, you don't need too many coins as far as trading is concerned. All you need for a particular coin at a point in time is volume that should be available. All right.
Okay.
So now I'll stop at this point so that I won't elongate this aspect. What I've done here
Yes.
now is to map all these key areas. So this is what we call key levels. What are key levels irrevocably? You are saying key levels are places where markets get to either stop going up or stop going down. And again,
Okay.
at another point in time, he was taking another move. He got to that place again. He couldn't cross up or he couldn't cross down. Example,
Mm.
look at it. Historically, on the 6th, on the 4th to 6th or 3rd of August 2024, the market got down
Mm.
here and take a move to go up and
Mm.
turn back to that point.
Exactly.
As of September the same year, and
Mm.
couldn't go down and make a move to go up, right? This time
Okay.
around, it crosses this first place. And then we
Yes.
expect that this guy should be going up. Unfortunately, he start coming down again. And he got to this same place again and
Mm.
returned to go up. So that means this must have been, we call it a very strong support region because this is
Okay.
first test, second test, third test. Do you get it now? So
Yes.
if this guy have done that, so as it's going up, because you have marked all this key level, what will be in your mind first? What will be in your mind first if I mark it this way? And I found that the market start returning from here. The first thing that will be in your mind is that if the market return from here, it may get to
Mm.
this point and start coming
Yeah.
down again. Or
Yes.
it may get to this point and break it forcefully.
Okay.
And
It
as
broke.
you can now see that he broke it forcefully. That means he got enough momentum. What is this momentum? There were buyers of people were just buying, more buyers were buying. And so
Okay.
your own is not the name of the coin. What are people doing with it per time?
Uh,
You get it
okay.
now. Yeah. So,
Yes.
so your own is so no permanent friend, no permanent enemy.
I'm telling you.
You understand? So so the
Mm.
guy continued to go up, but in your own, you because you have entered the market. So even if you are setting in your boat, for instance, if I'm
Mm.
setting in my boat and I saw that the market
Mm.
start returning from here, now if I take my ruler, for instance, and focus from here to this point,
Mm.
right? This
Mm.
is about 32%.
Okay.
He may not do it in one day. He may not do it in 2 days, maybe
Okay.
some days. So that point, I'm envisaging that since this guy have returned from this key level, I expect the market, even
Okay.
before it will start getting weakened, it should get to another key
Yeah.
level. Are you getting it
I
now?
see.
So, so you are projecting on that probability, but
Exactly.
you
That's
are
it.
aligning with a higher probability that this guy came here
Yes.
before, he went up, look at it, and he stopped and came down here. The other time he went up again, although he crossed this, but he still returned back here.
Yes.
Time and okay, let's say we read there now and return, no problem. It's not a fight.
Uh,
You now put your say, okay, imagine if you are using your boat, you are now say, okay, I'm going to put it
mm.
in cycle. But when you put your boat in cycle, maybe at a point you are monitoring
Okay.
it, you find the market, you come, and then when approaching this place, here now become
Okay.
a speed bomb that you are driving on the road.
Yeah, I'm telling you, you don't know the outcome or it
So
might
now,
be. Okay.
as you are driving on the road, you as the person who
Mm.
is driving,
Mm.
if you get to a speed bump limit, you must have been very
Yes.
violent and reckless, or you are so urgent that will make you climb the speed bump without slowing down.
Yes.
So now you are now looking at this guy that when this guy get to this point, he should slow down.
Okay. Mm.
Now, once he
Okay.
slowed down here, you expect two major reactions. After slowing down, he should say, I'm not continuing my journey again and calm down.
Yes.
Or
Mm.
it will slow down and progressively go up again and get weakened and return, just like what happened here.
Mm.
Can you see that now here?
Yeah.
And now
Exactly.
that here too. So in this case, if it's so strong, and continue the momentum,
Mm.
you may not close that
Mm.
boat that's still running on that cycle.
Okay.
You are not expecting
Okay.
that,
Okay.
okay, the guy may continue the next milestone, which is this place you have marked.
Okay.
Then the guy got
Okay.
there. There are chances, 100% chances that you will have stopped the boat here. You know why? He got to this
No.
spot and then he
Mm.
slowed down. And after the slowdown, all of this is a sign of the market is tired, right?
Yes.
So at that point, you say, this might have stayed. If you look at it, let me show you now. Um, this, this is each of these candle you are seeing, they represent 1 day activities. So
Okay.
if they represent 1 day activities, that means this is 1 day. So that means 1, 2, 3, 4, 5, 6. It took 6 days for this guy to get here. Can you see now? In these 6 days,
Yes.
you have set your boat on long. It will have been trading it, buy, sell, buy, sell, buy, sell, and all of that.
Okay.
Now, the seventh
Exactly.
day, he crossed it again. And then, so if you look at it, 6, 7, 8, 9, 10, 11, 12, 13,
Okay.
14. It took the 14 days to come back here too. So that's 2 weeks. That means my boat can be running for that 2 weeks. And if I see that the momentum
Exactly.
is still strong, and then your boat
Mm.
continues to run. Now, where sometimes you now see some drawdown in some of our boats is that when the market has
Mm.
gone, he has given profit at a point in time. So because I have marked
Exactly.
this point and I see that this guy is already tired, right? This
Mm.
guy is already tired. I have two options.
Okay.
I can stop my boat on that particular.
Manually. Okay.
Yes, I
Okay.
just go to the setting and
Okay.
click stop. It will
Yes.
stop.
That's it. Yeah.
Yes.
Okay.
So then when I stop here, I have second option. My second option is
Okay.
if, because sometimes you will hear me, I'll say we are in a bull market. So anything you see in the
Yes.
market, just like may just be normal pullback. So you want to be very
Yes.
careful. You want to be very careful the way you
Okay.
short the market against the trend.
I'm telling you, that's what you usually say.
So
It's
the
true.
option you may now have now is this. Oh, this market has moved for good 2 weeks. Oh, list
Okay.
one, two,
Mm.
3, 4, 5, 6, 7, 8,
Two,
9,
two, no.
10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20,
Two,
twenty
three,
one,
four.
22, 23, 24, 25, 26, 27, 28, 29,
Mhm.
30, 31, 30. That's for complete 1 month plus.
Okay.
Uh,
Yes.
So getting here, you now expect that this guy have actually tried and it
Mm.
aligned with the highest price in May where it got to. So at
Mm.
this point, what I may be doing in my boat, I may not do cycle, but I will short in single. Do you know why I'm sorting in
Okay.
single?
No.
Now,
Mm.
so that
Okay.
because the shorting I'm shorting
Okay.
is I'm countering the trend. So for that,
Okay.
I shouldn't stay too long because the trend may come and take over.
Exactly. That kind of thing. Mm.
So if I now short, I will be making money. I will come and exit.
Exactly.
I will come and exit. But I just short the market and say single. Now, if
Mm.
I discover that the way the market was now going, we have actually entered market to be crashing down to an extent, somewhere here,
Okay.
perhaps. Or you
Mm.
discover that the way the market was going is actually for a time being is correcting very
Mm.
massive. Now,
Okay.
we normally use a tool that if the market just want to correct,
Mm.
we
Okay.
should have it getting up to where it was. We should have it correct back to like 50% region. That anything that
Okay.
is not to stay on that 50% region, that means it's totally reversing.
Wow.
So
Mm.
if that is the
Okay.
case,
Wow.
since that happened here, I may be shorting
Mm.
and use cycle, targeting this place and this place.
I'm telling you.
Are you seeing it now? Okay.
Eh.
So
Mm.
now,
Yeah.
so this is daily time frame. And if you look at it now, if you look at it now, this guy is a downtrend on if you look at the daily time frame. So
Okay.
the first thing we talked about was the first thing we talk about is top-down analysis and key levels.
Yes.
So your top-down analysis is that you want to see in a higher time
Yes. And
frame, you want to map out all of those points or area of importance where you can make
Yes.
decision. And that's why you mark them that way. You get it? Now,
Mm.
because you have marked all these points now, and because if I'm a day trader, I may
Okay.
just I may just say, okay, I want to now look at my price action to know the trend. I can use like 4 hours, or I can use like 4 hours or 1 hour. Now, see something. We
Mm.
said, those of you who are coming late, Matthew, you come late. Samuel, you came late. Yeah, Samuel, you have been in. I know where you come in. Okay, so now, now, if you look at it, look at this market now. You have
Mm.
marked all these points. At first, right? At first,
Okay.
this guy was a downtrend. Now, this guy, in using my 4 hours, is a sideways market. Can I show you guys? Now, one of the things is that we have said top-down analysis. Oh, on a higher time frame, like daily time frame, I mark the key level. We now say the
Okay.
next thing we want to see price action, right? If you screenshot what I ask you to screenshot, you will see I talk about price action. Price actions are majorly the candle representation, the candle representation, yeah, so the candle representation and the combination of the candle to form chart. Okay, all of you are listening, right? Now, if price action is basically two major things, the candle representation of the price and the combination of many candles to form a chart. These are price action. So you will hear people say, I trade price action, I don't trade anything. So the person is telling you that I watch my candlestick and watch the combination of candlestick, what they form. Now, so if that is it, so what is happening here, I've marked this point. Invariably, if I check this market from up here, this is a downtrend. Reason is that this candle that I've checked, so we now have different candle and their what they interpret. If you look at it here at this key level, because most people to get carried away, hey, he formed this candle. This candle that is formed, is it at a key level? Oh, yes. Okay, that makes sense. Sorry, let me check. There was a trade
Oh,
that was running on gold
okay.
and oil. Okay, oh, yes. Okay, so now look at it now. Let me expand this now. So I'm sure you guys can see this candle. Let me see this candle as cycle, right? Now, that candle as cycle, can you see the candle as cycle? This candle as
Yes.
cycle is called gravestone doji. You don't need to cram them. Now, it's not about the name of the candle. Number one is that
Mm.
how it formed and where it formed. Now,
Okay.
so now this candle is formed at a key level that you mark before. Are you getting it now? And
Okay.
how does it form? This candle is just telling you that market was coming from down here. You don't even need anybody to tell you that market was coming from here. Is that not true?
Yes, it was.
Yeah. So that the market was coming from here. It now got to this point. It still forcefully
Mm.
go up. Oh. Are you getting it now? It still forcefully
Yes.
go up. Oh. Now, in this
Mm.
going up, so you look at this candle now. Look at this. Look at
Mm.
all this candle, right? This candle starts
Yes.
here. This one move very aggressive. That means more buyers. This shows more buyers. This is a bullish candle.
Okay.
So more
That's
people
very
are
good.
buying than number of people who are selling. And
Wow.
when
I
this
like that.
when these 4 hours complete, another candle first open and first went down. That means some
Mm.
sellers just want to take over. Buyers say you are wasting your time. More buyers again bought. It's like stock
I like
market,
that.
the bid
I like
and the
that a lot.
asking price. You get it.
Yes.
Now,
Yes.
again, another one now came. Yes, buyers took over, but there's a reduced number of buyers at this point, however. but the buyers still took over. That was why you see the market continue to what? To go up, go up, go up, go up,
Yes.
go up, go up. And at this point, they were tired. You don't even know who is in charge. Either is a buyer or
Exactly.
seller. So they can be equal part. Maybe 1 million
Yes.
buy 1 million buyer, $1 million
Yes.
buys, $1 million sell. So no problem. They counterbalance. So the market
Mm.
was now. Have you seen it now? So
Yes.
at that point, the if you are a trader, especially if you are a trend trader, you won't enjoy the market. You just say, I beg. Because what you are
Mm.
doing in trading is that you are checking
Exactly.
who is in charge so that you join their party. That's what you are looking for. Are the buyers in charge?
Kind
Yeah,
of.
very simple. Are the buyers in
Exactly.
are the buyers in charge? How will I know
At
that
this,
it is the buyers that are in charge? Though, so
okay.
that's when you now check those candle and chart. Oh, buyers
Mm.
are seems to have stepped into this market. For that, let me buy because
I like it.
buyers are in charge. Are you getting it now? Then
Yes, yes,
the
yes.
market continue to create that. It now get to this key level. If this candle you see here, this, you see this blue candle, it can be green, it can be whatever. The color does not really matter.
Mm.
But where the
Okay.
candle open from and where it closed to is what determines that the
Mm.
candle is bullish or bearish. So for
Bearish,
this
yes.
last candle here now, this blue candle, it means that that
Mm.
candle open and first went down and now go up.
Mm. Yeah.
So it closed, so
Okay.
that means it opened from the bottom and closed on top. That is bullish.
Yeah.
Now,
Okay.
this one, this particular one that went up, he opened from
Mm.
the bottom, he went down first and went up. Look at it, he went up to as high as this. But now,
Yes.
where it makes sense for you to now see this week, you see this tail, this long tail that I created on top now. Do you know
Mm.
what caused this tail?
No.
Buyers continue to buy the way this candle was.
Okay.
And
Okay.
seller just came in aggressively and attacked them.
Mocked up. In a fight.
Sell more volume. So that week, this long week is a sell pressure.
Hi.
So with that sell pressure, you now you are on standby. It's like seller are not taking it lightly. Oh.
They don't come up.
So as
Okay.
seller we're not taking it lightly. You are not looking for opportunity to confirm your own entry.
Mm.
Are you getting it now? So at that
Yes.
point, the next candle form is still do as if the buyers want to take for where. So it could be just one or two candle away. So what you are looking for is that since this was your key level, perhaps you want to
Yeah.
see when a proper candle close below this your key level.
Okay.
So you can now see that when I used to tell people trading is patient, you don't need to do gra gra. Now, you see this my line. You can see those dotted line I drew here, those dotted line.
Yeah.
They are the one that
Yes, yes, yes.
demarcated daily separation. So it means
Okay.
from here, from this line here to this line here was a day, which was
Okay.
on the
Okay.
7th of January. Now,
Okay.
from this line here to this line is another day, which is on the
Mm.
let's go here. Okay, this one, uh okay, this one was 6th of January, while this one
Mm.
was 7th of January. Now, there are people who trade here, but for me, who is targeting something important, I may not see
Mm.
anything to trade here for that day.
Okay.
I don't like
Mm.
entangling myself in the market. So at the end of
Okay.
the day, what happened? The following day, I saw this candle. This is the candle that opened. It first went up a little, and then this
Mm.
candle now closed below the key level. I'm
Mm.
interested in buying, in taking position. That means even if I'm using my boat, see my target
Mm.
now. If I'm using my
Okay.
boat, I'm
Mm.
targeting to short the market from here, all right,
Mm.
and put
Yes.
it in cycle till when the market get down to this key level.
Okay.
And you see the aggressiveness for this day because this thing have been going up. So the seller are retaliating all the journey it took
Mm.
up here. They say, no, we will
Okay.
crunch you. If assuming is going to continue the journey up, that's what we used to talk about
Mm.
the Fibonacci. We said, if this market were a move from here to this point, if you are doing me to continue the journey at the level of 50% to 60%, it should have been correcting back. That means the market will continue going up. But it got there. Look at the kind of candle that has been printed here. So these basics are what make me to say, okay, Felix, I'm shorting this market, for instance, and targeting that when it get to here. So look at from that place down here, it's about 20%.
That is
You understand? However,
yes.
even though I have short the market in my boat, then if I'm shorting it in manual, that means this is where most of you see when I send signal, I use this ruler. Now you see that I paste this way, and you see that I put stop loss. So this definition, when I send a signal either on Forex or any group or on synthetic, wherever. So this thing you have done is that even though I agree that the market is supposed to be going down, so in case he refuse and return back, this point,
Okay.
see this red, can you see that red? This red line,
Okay.
as I place my cursor, can we read, what did it show on top? It say what? Stop.
Okay. Yeah.
And
Stop.
then below the stop, what is written in that green on that green underground background?
Let me target also.
No, below
Which one?
Open.
stop.
He said
Oh,
open.
and then
Okay, open. Yeah, the opening. Yes, open.
open P and
Not
L.
the last one. Open.
Yeah. So
Yes.
then the
Okay.
last one
Yes.
say what? Target. Meaning
Target. Yes.
that I'm entering this market and I'm targeting this place. So for the
Okay.
fact that I'm targeting this place, so in case the market turn around to do another thing, stop me out of this. Let me manage the small loss.
Exactly.
But then this is just 4 hours. Am I taking the trade here? No. I just want to know with my key level, I want to know the direction of the market. Okay? So that means markets, I've seen that the market had gotten to a point where it's reversing, and that was what I come to do in higher time frame. So at this point, that want to find an entry, at that point, what I'm looking for is now probably to go to 1 hour, sometime maybe when I come in that day, I go to 1 hour time frame. Let's see what's going on. Okay. Okay, can you see now? As I come to 1 hour time frame, the market structure at 1 hour time frame has start changing. Because here was now here, this market, this is a low. So now we are going to what is called market structure. Are you guys following? We're now going to what is called market structure. Top-down analysis, you
Yes.
do your chart on daily time frame to see the key levels. And then 4 hours, of course, to see trend or perhaps point of reversal as it were. Now, if you look at this 1 hour, what do we call market structure? Market structure is actually the movement of the market in a given direction. And it is the structure that defines the trend. I've said that there are 3 trends we have: uptrend, downtrend,
Down.
sideways.
Sideways.
Or most people call it range band. You can market that is
Okay.
band. So it's moving, you go to a limit up, you go to a limit down. It didn't break out to those regions. It can be boring. That market can kill people before their time. Because psychologically speaking, the decision they will be making will not be correct. Okay? So if I
It's
come,
true.
so if I come now, for instance, and this market, you see this point here is a low, right? And then it creates a high. So that means at a point where the market got to a floor or a top and start changing, so meaning here or even here was a low, and it went up this way. So from where it came from, that's the low, that's the bottom where it came from, right? And then it went up, which is a high. It now came down here, which is a low. It now went up again, which is a high. It now came down, which is a low. It now went up again, which is a high. It now came down, which is a low. It now went up again, which is a high. It now came down, which is a low. So that's where they derive the language called market structure. The movement of the market, either up or down. And it's the movement of the market in structure that creates trend. So if the market, so market structure have this content. Let me just type it for us. So market structure have this content. High and low. What do I call it? Market structure have this content. High and what? Low.
High and low.
So when we now have multiple
High and low.
Yeah. So when we now have multiple of it, is when it become higher high. All right? Higher high. Okay? Yes.
Okay.
Higher high.
Yes,
Higher,
yeah.
higher low. You used to hear it. Higher low.
Yes.
Okay? So higher high,
Yes, sir.
higher low. So there are two major things. The content of the market structure is present of high and low. Then the substructure will now have higher high and higher low. Now, this guys is present in an uptrend, and I will show you. Here, where you will see in the structure, you will see it can be written this way. If it is the lowest, you will see LL. What is LL? Lower.
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 It went up here, perhaps up here. That is a higher high. So it can be high or just a higher high as it were. So if this now up here, so can you see now? This is a what? A higher high. Now, there's the presence of the next low. We used to call this one lower low. Low.
No,
But
sir.
call lower low again. What would you call it?
Higher low.
Higher low. Okay. So that would be HL.
Business. Okay.
Are you seeing it now? So now, this is now a higher low. Okay? Another high was majorly created here. So this one is the higher high. So let's carry it here. Let's just clone it and take it over here. Can you see now?
Yes.
So another low created, so which is going to give us this. Let's clone it. If you can pay attention and after all of these, you settle down to understand this, you won't struggle in your trade. Now, so this is it.
I'm telling you.
Good. Now, this is a low, right? Which is lower.
Yes,
Everything is lower low. Now, this is higher high. Now, this is higher low. It's low, but we're higher than the previous low. That's what we call it higher. Now, this one is high again, higher than this. We have another low. It's now higher low again because it's higher than the previous low. Now, so when you are looking at uptrend, which is this, people that will join us tomorrow will miss this because I won't go back here. We'll be taking trade. Now, see this now. See the way this market move now, right? This is part. This is the part the market use. Okay. Now, let me carry it out. Look at it. So now, in trading, we say market does not just move straight up. It doesn't just move straight down. So it moves zigzag. Sometimes can be more complicated beyond the textbook movement. Now, it will move and create what we call internal structure. Leave those ones. But this is what happened now. The market came down here. Why it was coming from here? Look at where it was coming from up here. It was coming from somewhere very far. Look at it. And came down to this point. And now create a low here. Once the market get to this point and create a low, listen everybody. When you are trailing a market, you don't just jump in. I will tell you people that say don't buy a market or sell a market when a candlestick has not closed. No, you wait for the close of the candle and see what the market want to do. Now, the market came down here, which is low. You are watching what will it do? You are watching what will it do? It now move up. Now, most of you, because it just start moving up, you will now buy. No, that it just move up does not mean it's going to go up. So that move up could be just a mere gap. Are you following now? So imagine where the market was coming down here. Can you see now? The market was coming down here.
Yes.
What did it do? It now move up. Imagine jumping because you saw the candle move up. What will have happened to you when the market now come down like this? Doctor, say hi. Now see this. This is another aggressive move up. This one again move up. You jump in. It now come down again against you. Hey, doctor, you just say village people.
I'm telling you, it's like 1 type percent.
You just say these village people still again. I think I have yeah.
Just where I want trade now. Everything gonna go against me. It's not easy. Understanding the market is very important.
It's very important. Well. Very, very important. So now, what am I supposed to be doing? Okay, when the market move up like this, I want to wait because that's the thing I'm going to be teaching you people throughout these 90 days that we're going to be taking trade. I only want to give this basic foundation. Why? The market came down here. That doesn't, and then it's moving up like this. No, that shouldn't push me to buy. What I'm waiting for is that as the market came down here, yes, fine and good. When it came down here, this point it came down to, it has created a low. Am I correct?
Yes, sir.
It now went top. It now went top and create a high. Am I correct?
Yes, sir.
And this high it has created, you want to see that this guy come down. Instead of crossing this low, he stop and start going up back. So when it start going up back, your attention is now here. You want the going up to now cross this one. That's what the ICT people call break of structure. Because what it was doing here was a structure that was moving. This is a high. This is a low. This is a high, right? Now, you want it because you want to buy. Then you wait for it. The next thing, the market now broke. So you cannot see it now moved down. So as it moved down here, it has disabused this guy. Now, this guy is no longer the low you are looking at. All right. So this guy become a higher low. Then you now have another lower low here.
Yes.
Are you seeing it now? Yeah. So in this case, you have not found a buy, but it got here actually, and now move up. In it moving up, there was a high that was present here before. Anything that did not make this guy break this one, you are not buying.
That's wonderful. I'm telling you.
So now you now watch the guy. Now, if you now want to sell, he got here, instead to go up here, he now start going down. I may sell. I can sell because it has refused to get back to this previous place. So if I sell from here, my stop loss will be above here. Do you know why I put my stop loss here? I say because anything that will make the market to break this one, that means you want to return.
Exactly.
So that's why you were not. So now, the market again came down. Can you see the market again? The market again came down. Are you seeing it now? He actually broke this guy again. Haven't broken this guy. That is another break of structure. Am I correct? But you now, now look back and see this guy. This was another high. Are you seeing it now?
Okay.
Now, this guy is actually high, but it's lower than this previous high. True or yes?
Yes, sir.
Good.
True, yes.
Now, the market actually broke this low and create another lower low. So in creating another lower low, you are already happy. Say, oh, another lower low is created. Can I just buy? So you may jump in and buy here. You are just gambling because when you buy here, there was a high that was left behind here. It has not been broken. The market again now move up. Instead to get to this high, it stop here again.
Wow.
Are you seeing it now? Now, in stopping here, you are now waiting. You know, this is the previous low, which was lower low. Am I correct?
Yes, sir.
And now, the guy now came down here again. You know, it's now lower than this now.
Yes.
So it has taken the rank of the lower low from this guy. Say, you are no longer the lowest, so I've created another. Are you getting it now?
Yes.
I've created another low. Now, after this low, market now move up again. But in this moving up, look at where it got to, this place now. So this is another high. But is it high up to this level?
No.
So when this market came down here and it was now moving up, was I supposed to be buying? No.
No, sir.
No, because
it has not broken this. Now, this is not what happened. What smart money concept tell you something. They said the structure was going down as long as the new move break the previous structure, the market will continue towards that direction again. As far as the market move and break the previous structure, that's what they call it break of structure. This is, as the market go below this, is a break of structure. It go below this, a break of structure. It go below this, a break of structure. Now, it has broken the structure here, which means this is the lowest now, right? Now, if we mark chairman, that was the lowest, which is the lower low. Now, what you are waiting for here is very simple. Two things. Now, we have seen the low and it create a high. That means the present high now is not this. The immediate high is this one. Are you getting now?
Yes.
So
Yes,
now, so the market now broke, right? The market now came, instead of breaking here, it stand there and now came down. Now, at this time, you are looking at, it's going to break the structure again. And remember, this is your key level ordinarily. So you expect that you're going to get to your key level though. But what happened? The guy now pushed back, but instead of getting to this place, he stopped here. All right? As he stopped here, very fantastic. Now, stopping here is now giving you a sign that it's like the jungle is now getting mature gradually.
I'm telling you.
So now, it didn't break this low. That means it didn't have intention to go further down. But should I jump in? The answer is no. So what you want is that since it didn't break this low, you need it to break this high.
To take action. Boy, that's too good. I like this kind of thing.
So now, when it now move and it was going up, you are waiting. Somebody will have jumped in here, fine. He may make profit, but he does not know how he got the profit. He may not be able to. He's a gambler.
Yes, exactly.
So now, the market now came. It now went up. What happened? It had gone above this previous high now and create another high. Now, once the new high is created, what you only want is that the market to now pull back. The pullback is supposed to be your entry.
I see.
When it breaks the recent high, when it breaks the recent high and now pull back, supposed to be your entry. Now look at it. If that to become your entry, for instance, this is your entry, you are now marking like this and say long. Now, when you enter here, now where is going to be your stop loss? Of course, you know, I'm using 1 hour, but we are going to go to lower time frame. You are not supposed to, because if you are not a position trader, you are not using 1 hour to enter. All this one, I'm just doing it for you to see clearly. Now, my stop loss is going to be below the recent swing low that creates high that pull back where you entered from. In most cases, we said, if you know what you are doing, if you are trading appropriately, sorry, where is this guy now? Okay. So I was on gold, I was trading gold and oil. Oil has even pulled back. Don't worry, we're going to go there. I was on gold and oil. And this US state. Okay, so let's go back to I think, was it not near we're using? It was near.
Yes. So the near protocol. Yeah.
Is it clear of? Was it not near protocol we're using just now?
It was near.
Yeah, it was near. It was near protocol. The markings are deleted also.
Okay, or it should be behind.
Yeah, it should be behind.
We started that from one of the beginning points or so.
Yeah, it should be behind. It's behind. It's
yes.
behind. It's behind. I think it was January something.
Yes, January.
Yes.
Yeah, look at it here. Look at it here. So now, yeah. Yeah. So now, what you were now doing is that, the market you have entered, and please take note. And I said, if I'm trading just like single entry and all of that, you are targeting your reward ratio is 1:2 mostly. So if you are targeting 1:2, and that's why you don't trade anyhow, you trade 1 pair per time. So now, if it's 1:2, that means you are looking at what you are saying is that if I agree to lose 2% or 3% of my money, what are you targeting that you agree to lose 2%? That means you'll be targeting times 2, which means I afford to say, okay, 2%, if it's 3%, let's say 3%, and if it's future, for instance, if it's 3%, 3%, and you are using, let's say, 5x leverage, 3 times 5 is 15%. And so 3 times 5 as 15%. Let's say you are using $20 to trade. So that means you have agreed to lose 15% of your $20. But you are now saying, in case I want to win, so 15% of your $20 will be how much?
That should
Maybe like $3 or $4.
$3 or so.
Okay,
about
so
$3 or so.
About $3 or so. You are now saying, in the quest to make $6, I may lose $3. Accepted. That was what you are. So you now place your trade. You don't get emotional about it. You allow it to run. After all, you have made up your mind. If I lose, I will lose $3. So there's nothing should disturb your brain about it.
Sleep.
So you can sleep, you can do whatever thing you are doing. So then, if you now win, you are making $6. As it close, you know you are making $6. That's why we say if you don't do appropriate risk management, at least if you do appropriate risk management and your risk reward, if it's 1:2, that if you win 2 trade and lose 3 trade, you will still be in profit. How? Why? 3%. No, if you lose 2 trade and win 2 trade, 50-50, you in profit. How? 2% times 2 or 3%, 3% times 2 is 6%. 3% times okay. 3% times 2 is 6%. Is that not true?
Yes, sir.
Yes.
All right. So 6% times 2 is how many?
12%.
How many?
12%.
12%.
12
So then 3% times 3 is how many?
is 9%.
So
9.
6% times 2 is how many?
It's 12.
So that means even if you lose 3 trades and you win 2,
Okay.
you still be in profit because you are properly in order of your risk reward management. Are you following now? If I trade in a day
Yes, sir.
and I lose 3 trades and I win 2 and I do my proper arrangement, I will still be in profit because it's 1:2 I am using. And so he hit my stop loss 2 times or 3 times and I win twice. I'll still be going to be in profit because 6 times 2 is 12. 3 times 3 is 9. If you win 2 trade and you lose, if you win 2 trade and you lose 2 trade and your portfolio is at loss, that means you are not organized. That means you have bad trading strategy. That means you're a gambler. You are always trading on impulse. You don't do proper arrangement. Because you can see now that the first organization of your trade is to have your proper arrangement the way I say it this way. And then when you don't see it, you foresee it, you can enter into it. So we have seen that this is a down uptrend, and that was why you entered. Now you have seen this is a downtrend, that's why you entered. Now let's look at where near is presently. I told you that near is in sideways market. Very boring. Can you see now? Let's go there.
Okay.
You see, imagine just what is happening to Bitcoin now. So imagine how near had been here. He managed to break out here and return back to the zone. Am I correct? See how he's doing. See how it has been doing. See how it has been doing. He managed to get to the roof again here. See where it is. Very choppy market. Are you getting it? Very choppy market.
Yes.
But we are now going to do something now. So we are within this range. Can you see now you will be confused? You don't even know where the market is going to.
Yes.
You don't even know where the market is going to. Now, irrespective of where you know where the market is going to. So sometime when I tell you people that if I give you 5 instruments to check and trade, all you need to do is that when you pick 1 or 2, you want to see the one that have very good structure, a very nice setting.
Okay.
So the one that is so choppy, I will avoid it. I will pick the one that have a very nice setup. And that's what form part of my decision. All right. But we're analyzing this thing now. Even if I'm going to enter a trade and make loss, I will do it. Now, so if you have gone to your 1 hour time frame, let's look at it here now. This market here, this is a high. Are you getting it now? This is a high. This is a low. This is another high. Right? This is another low. This is another high. But at this point, it becomes choppy at this middle. Okay, we have another low, lower than this now. So that means logically it's like a downtrend, but it's a very bad market. Sometimes when you see a market like this, respect yourself. If you cannot find good one, go and sleep. Are we getting it now? Cannot find a good one,
telling you.
go and sleep.
Go and sleep.
So now, if I have checked in 1 hour and straight away for my 1 hour, we now say we go to like 5 minutes to now find an entry. Now listen, this place I want to show you now is very, very important. Now, if I go to 5 minutes, remember we are coming from daily where you mark your structure. Don't fail to understand that. Now, having marked your structure, you even go on 4 hours to see the direction of the market, even on 1 hour. Now, as you see, we come to 5 minutes now. Does it not look as if the market is really trending well to you? So if you go to so going to the 5 minutes, we can invariably say this is a high, this is a low, this is a high, this is a low, this is a high, this is a low, right? Now, this one now became higher than this. It become more confused, creating internal structure. Now, this is a high, this is a low, this is a high, this is a low. So this is a high. This one is lower than this. I can say, okay, this is a downtrend. Now, look at the fantastic thing about trading. Haven't done this. This is what I want to show you now. You are going to be using this type of support and resistance strategy for your trading. What do I call it?
Okay.
What do I call
Support and resistance strategy
for your trading?
Support and resistance.
Okay. Now, ordinarily, since we're talking was when this guy came down from here. Remember, this is your daily key level up here, and down here is still the key level. Imagine this wide place you are seeing here. In a higher time frame, is very choppy. But it looks as if it's big. So now support and resistance strategy in your trading is very simple. You can lose some trade though, but you'll be organized in your trade not to do anyhow. For me, I will mark all my points. To mark support and resistance, we said every trade, every time frame have support and resistance points, but not every time frame that have what we call demand and supply zone. So this is what is now going to happen. Ordinarily, when you are trading as the market is moving, anywhere the market move to and create what we call impulse. What do we call impulse? See this market now. See the way the market was running down. Are you seeing it now? So it got here and stuck a little. You mark it out as your support.
Okay.
Like this. Okay?
Okay.
Anywhere as the market is moving, when it get to a point and stop, you mark it as a support. Now, I get here again, I mark it. I get here again, I mark it. So we miss out all of those things I had wanted to show. But let me now show you one here. I got two resistance here. I will show you people now. Okay, look up everybody. So now, you see the market got here, right? And start moving up. It got here, you actually mark it as resistance. He broke it. And then, look at this. What did I tell you about Gravestone Doji that time? Because the market was going up. I opened the candle properly so that you can see it. The market was doing what? Was going up. When it got up here, when you see where candle wick is coming from, it's a reaction of sellers. Market was going up, and then when it got up, the candle began to show more wicks. The more wicks is telling you that market is actually moving up, but there are sellers who press it down again. So you now mark the point as, what do you call it? What do you call it? Are you guys still there? Are you connected? No one is talking?
Sorry, sir. What are you asking? I had a call.
Okay. I say when you get to a market, it's going this way, it's going up, and you find a place where an impulse move and it stopped. This place I mark now is called what?
Double top.
No, I'm not talking of the chart pattern. This thing I just mark is called what?
Okay, supposed to be supply.
No, you are going too much.
Supplies.
Let me remove it back here. This place I mark here is what?
Weak.
This is resistance. You are calling it advanced name. I say every time the market take an impulse move and it get to a point, because you are using that 5 minutes, 1 minute to trade so that you short, you long, and all of that, you'll be making a lot of money. And so every impulse move and stop and market react that you mark it, it become your resistance or support. So here, I've marked this now. I just only stretch it out because when the market return to this point, if not, it will have been just here. When market come back to that point, you probably want to find an action. And this same thing has happened now here, right? That you saw the market create a kind of, this is what we call tweezer down. Then the market react down. And then you have marked this point, because that's what we're going to do. So you've marked this point as a point of interest that the market should return back to. Now the market actually returned, and we have said there are three things that could happen at the support level, right? First could be a sharp rejection. Two, it could be the next thing could be a sharp rejection. The next could be grab of liquidity, and the third could be weakness. And this has happened, and now, so if you look at it now, this is a lower time frame though. So if I'm going to look at this guy now to find an entry, because it has created a low here and then struggling to come over here and stop over here. Now, because this is a choppy market, it will not give you what you're actually looking for, but I'm going to risk something. So I'm going to go to so for instance, if I want to now long at this point, yeah, this is the next pullback should be by entry, perhaps. So my stop loss ordinarily, because I'll have to wait for this swing high to create another high. So, but I have told us this is a choppy market. It's not a very good one. So I just want to take a trade for you guys to see an example. And the one I'm going to analyze next is going to use in my boat. So I'm going to go to my, what is it called? I'm going to go to my CoinW, the network or something. So I go to my CoinW. Oh, see, even Trump is moving. I look for near protocol. You can see how choppy it is. Not even as sweet as what's it called? So I use 10x mostly. It's not as sweet as what's this guy called?
Okay, you need it, David. Okay, sorry.
So I long. Now, okay. Oh, there was a position that was running, I didn't even know. BTC. Now, listen. So what I'm trying to tell us, what I try to show us, very simple, is that the market, as what it is that you're using support and resistance strategy. Now, I told you that this near protocol is so choppy, and so that's not making it very fantastic. Now, you have marked your key levels of your market. And of course, you are interacting in between your key levels on your lower time frame. Either even 5 minutes or okay. That's look at, like, for instance, okay, this is forest, you will not understand it, so I'm gonna go there. So let's pick Trump. Good. Now, so let's use Trump now. Trump, this is 5 minutes. All right. So if we go to like 1 hour, probably we didn't mark Trump anyway. We go to 1 hour. If we go to 1 hour on Trump, here what you have. Trump is it was the lowest. This is another high. This low. This is high. All of this. Okay. So now, if I'm going to mark Trump, probably, and I said, additionally, what you want to add to your trading. Now, this is a downtrend, perhaps, right? Because this, okay, no, this was an impulse move. Because there's no, anytime you're calculating anything of these. So let's go to 15 minutes, perhaps. Okay, so you can see that 1 hour, it has actually a downtrend afterward. But probably let's see that the market want to take a return like we've told us initially. Now, the market has gotten to this point. And so if it's a market you are trading, and what we say about support and resistance was that you find a low and how. So here you've marked this low here. You have marked this low here as the temporal support. You expect the market to come down, reject, or to get there and weak out. And of course, this is a sign of weakness. And here, this guy, where should I be my entries here and my stop loss below here? Or sometimes people find a sniper entry, perhaps could have entered there and their stop loss here. So this guy now, it's remaining just like maybe one candle to complete a swing. So I can either wait or I can DCA, okay? And so that's why, so I will want to wait or I DCA. And so if I DCA, if you come down hard, so I'll be targeting up here, which is a potential resistance, right? This is a potential resistance. So that should be my target area, and so I can be taking profit in between here. So I go back to this guy. So Trump. And then before I will add indicator for you guys to see how the indicator help you. And I always recommend MACD for every beginner, no matter what it is. So 10x, yes, good. Yes. Somebody is talking?
No problem. I'm following.
Okay. Okay. So now what I was explaining was very simple, that ordinarily, that's why I always recommend that don't trade too many instruments at a go. So if I was following this instrument for the day, for the market haven't moved this way, I said every time a market have an impulsive move, you mark the point is stopped and start reacting as a support zone. Example, here was a support zone. Are you getting it now? So if the here was support zone, so if I mark it out, for instance, perhaps if you are not careful, this market is going to return back to this point. Just watch and see it's going to happen. Now, so if here was a support zone, when do I mark this support zone? Was it now that the market is going up? No. When the market was coming down from here, and ordinarily, the market moved this way, and somebody have sold down, and you are following the trade. Even if you didn't sell down when you come, you see that the market was falling down. Your target was that, oh, the market got here and move up here because this is a high. What I just taught us now, this is a high. So what you're looking for is that you have marked this point as a low. So what we expect this guy to do is to actually get here and bounce. But if he bounce here, then you need to take out where the market is coming from. So when you take out this, the pullback is your entry to buy. But instead of that, what the guy did was that he actually got here and all of that, and now moved back. He never got to that point. So that means a continuation. The next impulsive move is another low here, which where we are right now. So another low here, and I mark it out. How do I use to mark my own marking? Look at it. I mark it from the mouth of the wick, which is the body of the candle, to the wick. So the whole wick are captured like a zone. So now, what am I expecting? What I'm expecting is very simple. What am I expecting? What I'm expecting is very simple. I want this guy to, number one, so pay attention. I've been teaching this for a very long time, that when the market come down here, what I expect what I expect for this guy is for it to come down. Three things normally happen here. As he move up, you can see now that as he move up, it has created another high here. So when he create the high here, you want this guy now to come down and break this and still return back to this, or you want this guy to reach here and didn't turn to reach down here, which means it has created another low.
Okay.
Are you seeing it now?
Okay.
So it has created another low. So this was the lowest that was there before. And this was a high.
Yes.
So this is a low. So this low had make this guy to be lower low and make this low to be higher low. Now,
Yes.
it now broke this high. After breaking this high, any return and market, any bullish candle after it create this high, any coming down and move up candle is your entry, which means you perhaps may not catch the entry here. Your entry will be here because this is a high before, and now it has gone up and created another high. So since it has created another high, so the next move is your entry. That means by now, for anyone entering that who was following will have entered from here. Where should be your stop loss? So some conservative trader who know what they are doing, who never bother about, especially those of us who do in our future trading, we do like what do you call it? Cross leverage. The stop loss can be as low as this, but if you look at if it's a low, if it's a meme coin, so look at the stop loss. The stop loss is 2.37. So if I put stop loss 3.27, understand this that I'm putting stop loss at 3.27, 2.37. How many X am I using? I'm using 5X, for instance. Exactly, those of you are beginner, I always tell you use 3X or 5X. Don't be in a haze. Some people say, I use 50X. This is the amount of money I've made. Congratulations. Trading is not to make profit. Trading is to be profitable. So you should learn how to win. It's not about, I make a profit. It's to be profitable. So, and if I must be profitable, I must be logical. I must be strategic. I don't just need to do things anyhow. Are you getting it now?
Exactly.
So if you now look at it, now say, okay, if I'm entering this market at this point, 2.37% times 5 will be how many?
Number 12. Let's see.
Yeah, so 2.37
Okay, I'm doing it now.
times 5. That's about 11.85. Let's call it 12%. Now, if it's 12%, so 12%, so how much is the equity you are actually, so you are putting in? The equity you are putting in, let's say is $50 or $20 a trade. Because if you have $100 to trade, you don't put everything at a go. So let's say it's $50 you put per trade, okay, or $20. That means 12% of $50 times 0.12. That's $6. That means you are going to lose $6 should in case the trade actually goes out. Now you now say, okay, my risk reward is 1:2. When it closes again, you probably can look for another entry, but you have booked profit already. So now, you can see now, but ultimate goal is actually here, but it's only professional that does that. So professional will be targeting the major point over here. So, but you now that entered here, you are targeting 1:2. That means the moment market get here and it stop, okay, let me just DCA. You know, I entered, I say I was going to DCA and I've forgotten as was going. Unfortunately, I use split. I use split. I will not be able to DCA. I will only have another position. Many of you probably, so I use split. So now, if I'm now using my Utrading bot, in this case, because the market is so funny, it's not fantastic and all of that, I'm only going to use what do we call it? Single, not cycle. And I always tell you people that when you are using single, as you enter, right? As you enter, you will now target just 2% or maximum 3%. So that means if you are using your boat, Utrading boat, at this point, your setting will be like number one, you enter the market and your setting instead of cycle is going to be single. And
Okay.
your take profit target is going to be like 2%. Okay?
Yes.
And so when it's 2%, then your maximum order can be 2. Your maximum order can be 2. And then your price gap, because you may want another order to jump in. So your price gap can be like 3 or 4 or 5, 3 or 4%. Remember, if you cycle, I always tell us to use a very big price gap, like minimum of 10%. But if you are setting single, like you have analyzed the market the way I did this now, and then you are entering, immediately you enter, it will have taken a position. Then you now say 3% price gap. That means you are saying, even if this guy come down again, now buy the second position. And your take profit, I've missed another wonderful trade. Yes,
Wow.
I send it to some of us. Yeah, no, it's not a problem. We'll catch up. But I just need to do this thing for all of you guys so that we can be on the same page and all of that. Okay, so what I've just shown now is that I've shown you a naked kind of chart, right? I've showed you a naked chart so that when you see a naked chart, you don't fear. You see what you are checking is price action and market structure, right? I'm sure many of you now you can understand what they talk about market structure, price action right now, right? Because you are working with the candle movement and what you form. Now, like Samuel was talking of, chart pattern, like when you say double top. Now, all those ones probably as time goes by, you will learn it and to understand. But this first fundamental is very, very key. Is very, very key. So that you don't jump into you see, when I was entering this market, I say I need to wait for it to actually pull back, because I know that after an impulsive move and market starts sluggish, that means you want to correct before taking the next move. Are you getting it now? You want to correct. You want to correct before taking the next move. And you will just jump in at that point of even when it's about to do correction. Are you getting it? So you want to correct. So they will now use to do liquidity.
Hey, this life.
So if you don't know where the liquidity is, you are likely going to be the liquidity.
I'm telling you.
And in the market, if you don't know where the liquidity is, you are likely the liquidity.
Right.
And that's just the whole thing. Now, so the thing I will now add to it, I will now make it very simple for you people, is this. So that even when a signal is sent, if it's no longer valid, you will know. If it's still valid, you will know. Now, look at, look at now. Now you have seen this, just a simple thing. And I say there are two major instruments for beginner. Yeah, two major instruments for beginner. Number one instrument is called MACD.
Okay, MACD.
Look at it, MACD. Now, so you go to the trading view, for instance. Maybe many of you when you watch the video thereafter. So when you go to trading view, your trading view, you go to
this video
indicator. Yeah. So when you go to the indicator, if your own is clumsy like mine, as in it's compressed, you may not see it written as indicator, but that is the symbol of indicator. Now, if you click on it, you search for MACD. It's called MACD. That is moving average convergent divergence, because If you are looking for MACD, you may not see. It will give you the full interpretation of the name. So,
Exactly.
moving average, convergence, divergence. Then you click it. Once you click it, it will show like this.
Okay.
Are you following now?
Okay.
Now, the next one you will need is either of it. It's either you will add this indicator that will help you to identify what we call demand and supply zone. It's called fluid trade. Fluid. So you can see it. So any of those indicators, you see the star in the front of them, you can check them to be yellow and make it to be a favorite. So that anytime you want to look for them, you won't struggle, you can easily see them. Okay? So now, if you add these two, see what it's going to show you. Fluid trade. See what it's going to show you. Now, there are two major things that I showed you. Remember, the place is marking now. We've already marked it. Are you aware of that?
Yes.
See our mark. See our mark here. Where we say our expected point. Now, it came to mark this place. See our own we mark there. It marked this place as what they call supply zone. Okay? He marked that place as what is called supply zone. See where I told you that you will have find an entry. That was the demand zone. Are you seeing it now? So the indicator help you to equally mark some important areas.
Okay.
All right? Now, so let me take this thing away now. Let me take this mark here. See this BOS. What's the full meaning of BOS? Break of structure. It's telling you that the market had broken structure here. Meaning there was a low here, that the new low now is lower than this. That means structure has been broken. You get it now. But you ordinarily, before we put the indicator, you already know, okay, this is structure broken and all of that because of this simple explanation. So now it has gotten to this point, and even before the demand zone came, we already marked this place by ourselves. Look at it. Let me delete it. We marked this place and said this is a low, and this is a high, and another low here. That as long as this low, this new low created, it makes this previous low to be strengthened and stronger and identified to be a good low. At that point, you are now saying, since market didn't return here, some people do what we call sniper entry. And in their sniper entry is very simple. What they do, because backing up with even this indicator, look at what this is. Now, this indicator have done something. You see that the market continue to go down here, right? This is a low, this is a high, this is a low. But while the market was doing this, now the MACD already give you a signal now, which we're going to show you now. You see this line I mark here? That is, the market continue to go down. Don't you see, right? The market is still going down. But MACD already was going up. Can you see now? Let me show you. Can you see this? MACD has started returning here. Right?
Yes.
MACD return here.
Yes.
And this is a high for MACD. This is a low for MACD. This is a high. This is another low. So MACD is creating a lower low, higher high, and higher low. But market is creating a lower low and lower low, meaning that market is going down, MACD is going up. That's what we call divergence. That's what we call what? Divergence. So the divergence, so why is this divergence going to be interested? Why are we going to be interested in this divergence? Because MACD already telling you that market is going up, but the price saying I'm still going down. That means in no distant time, market will go up.
Oh, wow.
So MACD is already showing you that market is about to go up, but the price is still going down. But MACD is telling you, don't worry. Very soon, in no distant time, we're actually going to go up. And see, now, but some people don't know how to equally use the MACD. So because MACD had crossed here, right? Some people are going to buy because they just buy at MACD cross. But you that understand both MACD and price action, you want to see MACD cross, yes, and you want to see the market structure too, obeying the cross. But in this case, you have marked this place as low, and it went up. You want the low, another low to have been created. Instead of another low to be created, a higher low to be created, it created another low. So you will wait instead of longing here. So this is the reason why some people will have long here and market go down the more. They'll say, hey, that say this late finally came up. Are you getting it now? So you can see the MACD help you to identify. Then sometime, so since the MACD did this, that means MACD answer its second name on this market. And what's the second name? MACD is called moving average convergence divergence, meaning that there's some time the MACD and the price action will converge and align the same thing. So that means there was a convergence. So that means there was a convergence. Then sometime there can be divergence in their. So, but you want to work because the MACD actually measure volumes. So the price has not picked the volume, but the MACD is already telling you that there are volume that will move the market anytime soon. And that was why you say, okay, I'm waiting. In fact, some person who have checked their divergence, let me tell you now, some people who have checked their divergence, look at what they will have done. Since the MACD start moving here, but this one it continued to go down. Now, once there is a cross, another cross now happen here. See, when this cross now happen, you know, that's the low. You see, the pullback of this is their entry. They will have entered from here. That's a sniper entry traders. You know what is giving them the confidence? Even the MACD, there's a divergence in the MACD, and the market create another higher low, higher than this previous one. Now, the sniper entry trader, they can risk anything. And how? Look at what they will have done. They will have entered even before this. As the market start pushing up here, they will have found an entry here. And look at what they will have done. See where they will first take the first profit. Their stop loss is going to be below this swing low. And by now, do you know that those people have done 2:1, 1:2 already at the first take profit? So now, because of that, they have done the first take profit. They can now look at the second take profit into this our target up here. Are you seeing it now? So the second take profit can now be like this. And that's going to be bigger than 1:2. It will be like 1:4. Like agree to lose 3% to make 3%, 3 times 4, 12. Agree to lose 3% to make 12%. If you look at the trade that enter now here, you can see one of them is now in profit. One is in negative because I enter it early. I was telling people I would DCA. So the second one enter is already on 4 to 5%. While the one I first enter is on minus 40-something%. Do you get it now?
Yes.
So now, if it's in my boat now, right, it will have been the two will be together because the first one will enter. Then when it pull back by 4%, it will have entered the second one.
Yes. By another position, yeah.
Do you get it now? So at the end of at the end of the day, you will have seen that okay, the market is doing what it's supposed to do, and then I will just be fine. Then if it's on my exchange, okay, the two now are already like showing that they are in profit, but the second one is already 6%. You know, I was telling people, I say I just want to enter, but ordinarily I'm supposed to be waiting for this pullback to complete. This one that was happening before my entry. Let's look at. I think we enter even. I was using near to show an example. Let's see. Okay, near now has started moving too. Let's see. I think we open near. We open near now. Abi, was it not here? Open it. Yeah. Okay. Look at near too. The near I open to is in profit. It's on 5.5%.
Wow.
Are you seeing it now? So this
Yes.
foundation I've just given to us is that so that when I send signal, sometimes the trade is no longer going well, you can close because you already see I'm in profit, and I think he has gotten to this resistance. Do you understand? You begin to understand resistance support. Okay, look at the second entry. It's now 8.62% profit. It's now 10%.
Oh, wow. Wow. Hey.
No, you people
Just like that.
Yes, you know what?
Just like that.
Just like that.
Oh, wow.
Just like that. Just like that. You understand? Just like that. So, but if the basics are not given, and you probably will miss a whole lot of things. Do you understand?
Yes. That's good.
Okay, so that's just the foundational kind of, because I know a lot struggle because not getting the basics and the foundational, and then it can be very disturbing, seriously. So when a market is moving,
Wow.
so sometime instead of like, so all those single, when I say set it on single, the coin, so the list of the token I've given, they are enough for us to, right, to check. It's okay, maybe Dodge, maybe Chainlink, maybe Avas, and all of that. Okay, now, look at Chainlink just now. See, imagine. So imagine Chainlink.
Okay.
So imagine Chainlink now. Look at your MACD.
Mhm.
Look at your MACD. So let's look at it. So at the time we're even doing all those analysis, Chainlink 2 was down here, right? Now, so
Mm.
if you look at it, what's your MACD saying? Now, let me just make this MACD big. Look at it. MACD have very fantastic, support kind of system that, but if people use it wrongly, can be very troublesome. Now, if the market is not trending well, MACD will give you wrong interpretation. And so what was happening here? Look at MACD. MACD have different components, right? This green and red kind of histogram. So they are the MACD histogram. Okay. Now at the
Okay.
center here is called MACD zero line. Okay.
Okay.
So
Okay.
where those red and green joined together, they are called
Yes.
the zero line of MACD. Now, so this blue line is called the MACD
Mm.
line. It's called the MACD line.
Okay.
Why this purple line is called the
Okay.
signal line. Now, how does it actually work? Now, every time MACD, when you see the MACD line crosses
Mm.
below the signal line, it signifies market is selling. That signifies sell pressure. So that
Okay.
means when
So,
you find your confluence, maybe your price action, just the way we did now, you should be selling.
Okay.
If you only buy on spot, at that point, you can sell and wait.
Mm.
When you sell and
Okay.
wait, what are you waiting for? You are now saying, I don't sell, then you are watching. Look at MACD got here. Look at it at this point here. So MACD now cross. But as MACD cross, there's now second thing you want to see. You want to see the histogram too, coming green. This green is
Okay.
what measure the volume of buyers that buyers are actually in. It didn't
I
just
see.
cross for anything, but look at it. There was an attempt to cross here, but there was no volume. There was no sell.
Okay.
So when you allow the MACD to cross and you see this green, and the higher the green is going, the stronger the trend.
Yes.
You
Okay.
can now see now that even when you are trading spot, just to buy low, sell high,
Mm.
that means
Mm.
at that point, so I can buy here, I can use even MACD to buy and exit. How? Look at it. When it crosses here, you buy,
Mm.
and the volume is
Okay.
adding up. Now the market
Mm.
gets up. You see the MACD start about to cross, about to go down. That means when it's now turning down, you see that the volume is reducing, it's fainting.
Exactly.
Instead of deep green now, instead of going higher and deep, it's now light and then digressing. You can now see eventually when the MACD line crosses, it start painting red. With this painting red, you already exit. Say, okay, I'm waiting for you when you show a buy again. And look at it. After that sell, look at it here now. There's another cross. And then you say, okay, since you don't cross, I don't want buy again.
You know.
And then that buy, you are still holding it. And so look at the chart. You see the way it goes. Can you see?
Exactly.
Are you see now? So somebody who is even trading chain link, imagine from here, even without your okay, this 3%, your call it for me, our you trading boat. You are just, since the market is not too juicy, you are just doing single. You see that, okay, the thing is in chain link, you do single and all of that as it's going. Then you enter again and all of that. And look at what this guy have done, the flute trader I just say. He has marked this point as the demand zone. I'm telling you, point of where potentially you should be exiting. And you get there now, it starts showing sign as if you want to retrace.
Yes.
So, but has he actually retraced? No. For the fact that he shows sign, you may exit and watch again to see, can he continue the momentum? Now, you can see now, he's about to continue the momentum because the candle is almost painting green again. But you look at your MACD, it's still green, showing that energy is still there.
Okay, wow. It's
These are simple things, right? Look at our Oga here. See now, the what's it called? The Trump I enter now. So imagine the person who enter from here, he was almost taking profit. If we check it now, you will see that we are in okay, the profit has reduced because of it took a drawdown. That's 8% because it's showing sign of resistance and all of that. Okay, so but for me, I don't even look at it now. Look at the near, is still on 7 or 8%, and then if you check the near too, where is near?
Okay.
Near. Where are you? Okay, here is near. So you can see now, while I told you that when I'm checking, when it's towards the place that it was reversing, it will get there and start struggling. Assuming we're following near from the beginning, this will have been our entry. So by now, probably will have been. So if I even use my single entry for my Utrading, targeting 2%, it will have closed the trade by now.
Okay.
Yes, it will have closed the trade by now on 2%. You will have closed it.
Yeah, exactly.
I will just come back and see that, okay, it has given me my profit. I say, okay, since you are giving my profit, if I decide to see another entry or another coin, I put it again. Like that. But if these basics are not gotten, you are just going to be wasting the opportunity.
Exactly. Trading view.
So this video, I'm going to upload it and send it to us so that we can watch it.
Exactly. Very important. I need to go through this over and over.
Yes.
Very important.
Yes.
Internalize it. I'll be like a New Year gift for us. Go through.
Yeah.
Over and over, indeed.
So that when you maybe some coin you put in your boat as it's running, sometimes you just come to your trading view and check. Did this guy still have life or is about to go down?
Exactly.
So, and for instance, some of the coin must have given you, let's say, $5 or $10 profit, right? And at that point, you are saying that it's like this coin is tired, or is want to start coming down. it's already giving you a down of like $1 or $2. You can close it because you have $5.
Exactly.
So when you now close it, you say, let me wait for it again. When it comes down to a appropriate place again, I will now enter back. You will have seen that much money will have been made.
I'm telling you, than just allowing it running and floating, and it's true.
Much money will have been made, and that's
right.
Yeah, much money will have been made and all of that. But of course, it's a gradual process,
Exactly, that is it. We learn by a lot of factors.
Yes.
So much appreciated. So wow.
These
are the things now. As you are teaching these are things people pay huge amount of money to go learn. No, it's not easy. As basic as they are. But you're just giving it a platter of good here. That's good. I truly appreciate it. Indeed. It's
It is well. So I'll have to, I need to go and do other thing. Then I will need to upload this video for you guys. It's very, very important, I think, so that.
Exactly. Let's digest this one for today. At least have enough grasp of those factors highlighted.
Thank you so much, sir.
Thank you so much, sir. God bless you, sir.
Matthew,
truly appreciate you,
sir. God bless you, sir.
telling you.
God bless you.
Truly appreciate. It's not everybody that will do this based on your level now. Based on the level you've got into, if you just abandon the beginner, now this place should go to hell. But just bring down your time to come low, as in explaining this. It's not easy. Honestly, it's not easy. If I talk, my motor no go stop to run for road. It's not easy. It's worth appreciating very much. Appreciating indeed. At least. It was many times you see some of the assets running trades in the Utrading, taking decision on when to say, okay, let me leave the market, then come back and all that. You may not be able to. You're waiting for Felix. Felix may be so busy with some other things to come and say, well, everybody leave now. Everybody come back. It's not easy. So teaching as in how to catch the fish is really very important. How to catch it so that people can follow. It's a landmark. This thing you have it's a legacy you are leaving behind indeed, and it's a good thing. I must appreciate. Honestly. It's not easy. It's I know many people that you will ask for this and they will say, okay, you come to one group, you have to pay $1 million. I will teach you this.
And they will just
then if you now want to learn, and this thing, they may not break it as low as it's explaining. It's okay, just give one or two things. I'm going to have to pay another 1 million for another section. This to learn the one that's a bit higher than this.
Yes.
And by the time you start looking at all of this, even he said, now some people they take link crypto. This crypto safe now wicked, What make I just go back to it?
Yes.
Well, indeed, there as well. And he posted this. Now many people did not come for this. Now this guy don't post another link. I just saw it. I said that let me come, but I don't know what will happen. And behold, you see, it's just the basics you are going to. It's very, in fact, I don't know why I even woke up today.
Nigeria, we love Zbo ministry.
I'm telling you, sharp, Uluwa sharp. As in,
that's why this scheme cannot stop in Nigeria.
Of course, now exactly. Bring 5 naira and take 2 million in 2 hours.
Even if you stop and all that, Nigeria, it will never stop.
You don't like learning, going through the nitty-gritty to understand what to sustain you tomorrow and next.
No,
it's just the one is bring it today. If you ripe, bring them. If you know ripe, pluck them too. You go right for inside the pocket. All of them. Just
Nigeria can never refrain from Ponzi scheme. And most of those companies that
and people who are
they are targeting gullible Nigerians now. They know that Nigerians are very gullible.
Exactly. So they study your psyche, the psyche of people, what they want. So they bring the market for that you want.
Of course. That's what they do.
Honestly.
That's what they do.
But honestly speaking, and our people will not stop. Just like okay, there is one woman that I keep doing some health talk. Even when patients come to my facility, I will keep educating freely. I know people pay to go to consult